Mutual funds are a popular way for beginners to start investing. But what exactly happens when you buy one? Let us break it down. At its core, a mutual fund is a pool of money collected from many investors to buy a portfolio of stocks, bonds, or other assets. Instead of buying one company, you own a tiny piece of hundreds or thousands of different securities through a single investment. Funds offer professional oversight and instant diversification, which is why they are a staple in many long-term retirement accounts. While they look similar, mutual funds are priced once per day, unlike exchange-traded funds which trade like stocks throughout market hours. Investors pay an expense ratio, which covers the fund's operating expenses. Always check this fee, as it impacts your long-term returns. Remember that while funds reduce the risk of one company failing, they still carry market risk. Always research what is inside the fund. Understanding mutual funds is your first step toward building a portfolio. Check your brokerage account for more details. Thanks for watching.